So messy here, no shit.
All right, let's see this
shit
thing.
messy as hell, bro.
Copy link, this and that, Discord, Telegram. All right.
Look at this Doge shit.
Yeah, I was looking at Doge. Kind of crazy.
Look at this 15-minute hit.
Wow, perfect, right?
Mm-hmm.
All right. OBS. Let me fire that up. All right, start recording. Still on. All right, 2 minutes. 2 minutes. Let everybody get here. Oh, somebody drop a line in the trading chat general. The link to the event.
I got you.
Yeah.
Oh shit! I got my book coming in tomorrow. I forgot.
What book?
I ordered Reminiscence of Stock Operator.
Oh, all right.
Me about.
Again, it's bad like mentality of momentum trading, not and anyway, it's a good book. It helped me a lot on my journey in trading. So yeah. All right. 1 minute. We'll just let everybody get here because I'm already streaming on Trading You on YouTube. So if you guys and yeah, so we're everywhere. There we go. Yeah, 6 o'clock. All right, yo, no Robbie inside. Jesus Christ. All right, we got six screens though. This guy. All right. So welcome everybody. This is our weekly webinar where we do the prep work. As you can see right now on my screen, we have a bunch of screens, a bunch of different traders streaming live, and this is the what we do actually on daily basis. We have a bunch of traders, or everybody has their own specialty, and you can watch different traders take different trades all live, no post factum bullshit, which you usually see on YouTube, cherry picking nonsense. This is actually all live, and I don't think there's anything like this. At least I haven't seen anything like this. So if you want to learn something, how to trade, and there's no better place than apexbull.com, and the link is to our Discord is in the descriptions wherever you're watching this. So now, housekeeping aside, I'm just going to jump on my screen. And the way we start every week is very simple. We have to know what's going on in the week ahead. So we check the economic calendar, and we see who is doing what economic news gets released. So this week we actually have, depending on what you trade. So even if you trade crypto and you don't give a shit about currencies, for example, you still have to understand that, for example, on Friday we're going to have non-farm payrolls and markets are going to move. And if stock indices and U.S. dollar and gold are going to be moving, you bet your ass Bitcoin and ETH and all the shit coins will be moving as well, because every market is correlated in some degree, and especially in this environment now, where it's basically U.S. dollars and U.S. rates versus everything else. So, with that said, we have a couple of trades on the pound still, and on Tuesday, their BOE governor will be speaking, but the big one will be well. We also have Wednesday. Powell will be yapping just yet again. He's almost like he should be on TV or 24/7 at this point. He just can't get enough of talking. Anyway, and Friday is the big one. Friday is the non-farm payrolls. So we're gonna have fireworks for sure, because depending on the jobs, and we have quite a low number too. If we have strong economy, that means the Fed is able to keep on raising interest rates. If the economy is starting to falter, that means that the risk will rally, and as Fed will be forced to pivot sooner rather than later. So otherwise, nothing of note on anything. Well, ISM manufacturing PMI will be on Thursday. Also, might be a market mover. Everything else is currency specific. Hey.
Taken care of.
Yeah.
Yeah.
So, hot mics be they happen. Anyway, so uh, yeah. So let's take a look at what's going on with the major markets. First of all, I want to talk about the S&P 500 because basically it's the stock indices that, and I made a post. Let me actually. How do I? You know what? Let's take the layout. Let me see. Profile settings in the new tab, and the ideas I posted. So basically, the S&P 500 is every time we would hit a zone between 786 and 618 fib, we would go lower. It happened 1, 2, and now we are approaching the same zone. Not only that, we also have a lot of we have order blocks and other resistances sitting right there. So I was looking, and this is a daily chart. I was thinking maybe we're gonna pop a little higher. There's the trend line there, a bunch of resistances there, the fibs are there. So again, the only thing I think that might prolong this sideways consolidation is is because we're approaching Christmas, and usually we get a little Christmas rally. So if anything, we're gonna might pop up a little bit more, do sideways, and then sell off in January. And we've in our Discord we were discussing uh, exactly that with the chart that correlates. Where is it? As you can see on my screen, the S&P 500 from 2001, the tech crash, and how we've pumped into Thanksgiving. We did it a little sideways, and then we sold off exactly in January. We started selling off, and I think might be the case again. In This is now, and this is the same, very similar price action following Thanksgiving. So I think we can either sell off a little bit now and then rally in these in a couple of weeks into Christmas, or do it just sideways to a little up before we tank. So S&P, like I said, it's if history is of to repeat itself, we're approaching a heavy resistance. The 200-day moving average is right there. A bunch of order blocks and fibs and everything in their mother. So and short term time frames already displaying um, divergences with price inefficiencies to close as well. So even so, all rallies at this point should be sold, and this is not the time to enter into long positions. The only thing of concern is the US 30 that on a monthly printed a nasty engulfing candle and took out the resistance. But everything else points, and right now it's working at this key level. Uh, so we've closed above it and we opened below it. So I think this is with the price. We always pay attention how the price got to where it got to. So when you have a vertical price like this in a rallying aggressively into key resistance, into key area. Usually, even if we blow through the resistance to grab liquidity, because stop losses of people who are short are above this level, we're gonna grab the liquidity, run their stops, and because the price is basically is gonna have a price exhaustion. So if you see a reversal candle with a long wick to the top side and a small body on the bottom, that's going to be a sign mortgage your house and sell and walk away for a month. It's like this candle but in reverse, right? So if you see something like that, that's an exhaustion price pattern, kind of like it happened also here. See, we blew through these stops. This is the exhaustion I'm talking about, and then we rallied. So very similar price action might happen in reverse here. That was S&P 500. We can briefly mention some crypto with Doge rallying today because there's a unconfirmed report that Elon Musk might use it as payments for Twitter, and he might integrate it into the ecosystem. So that's why we have a nice pop. We were actually trading it on the weekend. Blackstone was trading it alongside from this order blocks here and rallied nicely. We took profits obviously much sooner because it was a little iffy, but this happened anyway. Gold is a big one. Everybody always talks about gold. So gold is uh, I have two scenarios for gold. So we are obviously making lower lows, lower highs, still in a downtrend. We've reached the very key resistance on a daily. This was a daily order block that we sold off from, but now we sold off into the previous key resistance turn support. So usually when resistance turns into support, it's a bullish sign. Doesn't mean we're gonna um, rally automatically, but it is a possibility. So basically, here is two scenarios. One scenario, we basically sell off from here because we have a lot of price inefficiencies and liquidity voids right here. As you can see, the price was delivered in a very aggressive manner. And usually, when you have gaps in price action like that, call it the price inefficiency, liquidity gap, or fair value gap, whatever you want to call it, uh, um, it usually gets filled at some point. And as you can see, the price exhausted itself last week. We were already shorting this, or 2 weeks ago, actually, we were shorting this already because the price was really running out of steam, as shown by the momentum here as well. So maybe we'll go a little bit up and start selling off again, which will be a nice scenario. But I'm still waiting because we were basically doing a low, a lower high, a lower low, a lower high, a lower low. But then now we printed a lower high. So unless we take out this resistance, and we might very just easily just keep on rolling over lower to fill all of this inefficiency before gold either goes up or down or whatever. So the easy money has been made, obviously, shorting this overextension, and now I want to see either it pop below above these highs here, or start taking these lows here for acceleration downwards. Fuck it, let's take a look at oil. I suppose oil is a peculiar beast, unless you follow the news. Uh, Sitting right at resistance here. So winter is coming. I don't know. And OPEC is. There's a lot of rumors going on constantly where United States says, "Oh, the OPEC has agreed to output increase," and then OPEC, Saudi Arabia comes in on the wire, says, "Fuck you, we didn't say this shit," and it's just silly nonsense. And the price just, well, this price action here was that news a couple of days ago and last week, and it's getting volatile. But overall, it's still. Fundamentally positioned to the top side. Obviously, we're just retracing off of this of these lows here. We're just retracing right now, but given we are now sitting at the key levels from previous swing highs, if we start seeing a bounce happen and we already have a divergence going on here, we might start seeing some interesting opportunities for the long side. So maybe we'll run the stops here and reverse. Definitely not. I wouldn't advise selling here. What else? Let's take a look at the US dollar. So, like we've been talking about last week, the US dollar, this is 1, 2, 3, 4, and a 5. That's an Elliott wave count, basically saying that we're now in a corrective wave 4, and there's two ways we can go about. We can bounce from here, or we can bounce and still go down one more time before another up thrust. And that's a weekly chart, so that I'm talking about like next 6 months. The way it looks on daily, we basically the 38.2, we barely missed the 38.2. But we did tap this. There was a daily order block there, I suppose. Barely missed the 38 too, but we did tap. Yeah. So we we've tapped the support. We bounced, and now, as you can see, we're not making the lower low. We made the high, we made a lower low, and all we gotta do is now is wait for. And you can see that we gapped up. So we're gonna close this gap in about next 4 hours or so. We're gonna close this gap, and then we're gonna see, because if we take out this low, that means we're gonna have one more leg down before a corrective leg up. So and if this low holds right here, uh, we probably gonna take out this high and go higher. So the way it looks on the euro dollar, for example, we were suggesting short here for myriad of reasons. I don't think I made a video on it. I don't remember already. There was an order block and the previous resistance and blah 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 blah. Anyway, so it was spot on call, because I made this call when we were here. That's why the line is drawn at this bar, and then this happened, and this is where we are right now. We are right at support though, so I have to be careful. And once we take out the support, it should accelerate lower. I'm short pound, same reason. I'm waiting for. The only problem is with pound, it's really at now sitting at support, so I might have to close it either here or wait for the breakdown in a couple hours, because I think there's a nice fair value gap. The price was delivered in again an aggressive manner, and just like gold, it ran out of steam with a bunch of divergences in momentum, and now it's just a distribution happening up on top. So if it's a distribution and not a reaccumulation, then we will have to close this gap, because look at this vertical price. This thing never lasts. Look anywhere in the previous price delivery of this matter. So looky here, it's a very similar picture here. A lot of distribution, and then lower to close all these gaps. It didn't make a lower low, but it did close all the gaps. So I highly expect to see sub 120 this week in pound. So maybe mid 119s. So there's definitely a lot of room to go and trades to take. Dollar yen.
Oh, the Forex.
Yeah, Forex.
Okay.
Yeah, so dollar yen. I will do crypto in a little bit. So dollar yen is a messy one. So it bounced off of previous. We've basically rallied. Let me remove this. We rallied. We found support at the previous key level, and we're bouncing. So we need to keep on this momentum going and take out these highs for for an accelerated move up, because we also have price inefficiency, liquidity gaps, and all this good stuff up here, as you can see. So I think there's a good chance that we might rally, and there's more here as well. So maybe if we might not rally all the way up here today, obviously, but close this immediate one around 140, 141 is it very easily can happen. So with I'll just do the ETH, and then I'll switch to others to do the crypto. I made a post basically on ETH showing confluence of different tools that you can use to make trades. So this is the volume, which tells you at which level everything was traded. Volume, this thing, you can actually show it on both sides, and but I want it only for this congestion here. So this volume is showing that we have resistance of this inverted head and shoulders right here, but there's a void. Uh, so very likely price can pop into. There's a 4 hour, 1 hour, and five up to 5 minute order blocks all the way up here, and that's what we were waiting for. Price to pop a little higher to short it, and we're going to target these range lows because basically because of this gap here in the volume, and then high volume in the area of the sell will provide the resistance necessary for the price to roll over, plus the order block itself. And so that's the trade I we posted earlier. In any case, if, like I said, we can follow. There's a whole bunch of traders you can follow, not just me. I don't know, Blackson, you want to take a look at a couple or Lobo?
All right, let's have a look at Bitcoin, for example.
Well, you
Bitcoin
have
and
ETH
Ether
as
are
well, but you
interesting
have
right now.
actually buy the dip ETH play. If it starts rolling over from here and not wait, so that's actually not a bad idea as well.
We did break the liquidity on the downside for Ethereum right now, but
Yeah, very nice.
like my nearest block is at 1193, and I don't really like the position of it. It's really not. So I'll just let it play for now instead of play out. DXY is pumping upwards. Let's see if we break it, even though it isn't a bearish pattern, so to speak. Because of this up pivot.
Wait, let's see, Lobo. You showing your screen, all right?
Yeah, the two screens I have. The two screens up.
Yeah.
So
Wait.
this
Can
is
you
somewhat bearish, but
yeah? Can you switch to the other one because this one is a little
yeah,
blurry.
blurry. Is it
Yeah.
blurry? All right, yeah, I'm on the other one.
There you go.
DXY. Let's go back to the DXY. DXY. Yeah, we have somewhat of a bearish pattern. It's going on an up pivot, so it could go down, but we'll see. I can't really draw out a top line for this, but we shall see. But Ethereum did break downwards, so we're looking for longs for now.
Oh, yeah, I forgot to mention the reason why everything gapped down in risk was because China is going into lockdown with the COVID shit again, and there are protests erupting all over China because they're like literally welding the doors shut in buildings so the people don't come out, which is fucking ridiculous. So some heinous shit going on over there. They're doing, even if you watch the World Cup right now, the feed on TV in China, it blurs all the public, the fans in the stadium. The reason why they blur out all the fans in the stadium is because nobody's wearing masks, and the Chinese don't know that the whole world is not wearing masks anymore. That's how ridiculous it is. Yeah. So that's why Risk is getting sold off on. That's why over the weekend that was the big Kahuna that is being priced in right now.
Yeah, so basically the
looks like
macro
it's coming
environment is
up
only
to the
getting
long
worse.
range. Doge is coming down.
Yeah.
Doge, how far is it coming down? Wait, let me look at Link because I have an entry open for Link.
I have Doge up the 09 0.097.
Do we have an XRP right now?
The XRP is what I've not checked out. Yeah.
I haven't checked XRP though. We got 4 hourly down here. I don't think.
Yeah, that's
a long way. That's a long way though.
Cardano, nothing much. Well, the crypto's not really moving today. It's moving downwards. So we just need to break out of this pattern. We've been in this Bitcoin pattern, this daily pattern for way too long.
Yeah, when Bitcoin squeezes out this, we're gonna see a real.
Yeah, but bro, look what happened. We squeezed out of this last triangle, like the last bottom when we went down. It was over like 11 days. Mm-hmm. So like the one from the beginning of November, it was like 12 days, like 2 weeks almost. Not even like
this big one right here. You mean?
Yeah, and then we're probably going to break again and cause another one of those patterns. So this one was a week, not even a week, like 5 days, 4 days.
Yeah, that's probably the case because we got that inefficiency on the downside still, bro.
So there's not many trades to take compared to back here. Back here, there was a lot more movement all around the chart through the bear flag here, whatever they want to call this.
I mean, Bitcoin's moving, bro. Damn.
Yeah, Bitcoin has been moving like this. These are the good times, but now it's just kind of slow. Got to see where the markets go.
How's S&P doing? Yeah, everything gapped down heavily.
Oh, I forgot. Well. Yeah, I forgot even to put it on a short time frame to take a look. But we should have taken a look at the bonds. But yeah, we'll see.
Look at S&P. It broke the trend line.
Yeah, so it's looking topish to fill those inefficiencies then downstairs. So it would be nice. Plus a double top. So
nice.
Yeah. So actually, not bad at all. I'm short S&P from last week, so I'm in profit. And I think what.
What's up? I am in profit on that Nash short still.
All
Still
right.
in how
Yeah.
much point is that? Yeah, 100-point profit still. I'm gonna hold that one out.
Yeah, it's gonna
There's
keep on
probably
dropping. The risk should be keep on dropping. So
we just hit a 1 hour on Nas though. Probably gonna make a little bounce, fill the gap, and then move back down because
yeah,
the
so
macro
all these
environment is
gaps,
not too
yeah,
bad.
all these gaps will probably be filled because usually gaps
Mhm.
get filled within a couple hours. So if you would really want to, if you're adventurous and you want to scalp this thing to the the gap close, but that's more of gambling than
Yeah, it is.
actual trading. So
It's too little to actually, it's like 30 points. Not worth it.
yeah, not worth it at all. So you might just get in trouble, get stuck, or yeah,
I don't think
definitely.
we're gonna move above this top right here though, because of that weekly order block we just hit on Nas.
Oh yeah. Oh, by the
Yeah.
way, yeah, those weeklies. We've done some
We gotta
homework over the weekend, and those weeklies are a fucking motherfucker. They usually work like a charm. So that's another reason why we're staying short risk. And even with the US 30 chart that I was showing, with the engulfing candle, the S&P and the Nas don't look good. So I'll go with the majority, not just minority that US 30 is now. So yeah.
All right.
All right, so I'm gonna for the ones who are watching on YouTube and trading you, again, you're more than welcome to stop by the Discord because we do this live daily. You can watch a bunch of traders, different monitors, different trading styles. We have swing traders, scalpers, day traders. Anyway, you can learn much faster from people doing it live in the trenches, not just. Cherry picking bullshit that they highlights on YouTube, and you think that that's trading. This is actual trading. So link is in the description. It's free, and yeah, I don't think you're gonna get better value than this. You're more than welcome to stop by, check out the links in the description page wherever you're watching this, and we'll be broadcasting tomorrow morning at what is it, 8:30 a.m. 8:20 a.m. New York time for the news at 8:30, and then we'll wait for the cash market open and the stock indices and go from there until the late afternoon. So more than welcome to stop by. Enjoy the rest of your Sunday, and yeah, if you have any questions, stop by, say hi. We always appreciate it. Cheers. All right.
All right. We're losing up the collar.